That means PTIX is susceptible to further declines.
Okay, so to recap, APVO's got some good news propelling it forward. NIVF's struggling, and PTIX is basically riding the market wave wherever it goes.
Yeah.
Now let's get into this idea you mentioned about benefiting from market crashes.
Right.
You said some investors believe it's possible to actually make money during these downturns. How does that work?
Well, the basic idea is that big market crashes can create opportunities for certain investors. It's all about buying assets, stocks, or index funds at low prices during the crash and then selling them for a profit when the market recovers.
So the classic buy low, sell high, but on a bigger scale.
Exactly. Historically, there have been investors who've made short-term gains this way, especially after events like trade wars.
But it seems incredibly risky.
It definitely is. You have to look beyond just those potential short-term gains and really consider the bigger economic picture and the risks involved.
Right, because a market crash isn't just some isolated event that only affects a few people. It can have a ripple effect on the entire economy.
Absolutely. We're
Well,
talking job losses, businesses shutting down, consumer confidence plummeting. So yeah, while some investors might make a quick buck, the overall economic environment can become much tougher for everyone else.
and there's no guarantee that the market will recover quickly or even at all.
Right. Recovery isn't a given. It depends on a lot of factors, like how those underlying policy issues are resolved and the health of the economy. Remember the 2018-2019 trade war? The market recovered there, but only because a trade agreement was reached. There's no guarantee we'll see a similar resolution this time.
So you could end up holding on to those assets you bought low for a long time, hoping for a recovery that might never come.
Exactly. Timing the market bottom is incredibly difficult.
And it's worth pointing out that this whole strategy of profiting from market crashes, it's not some universally accepted surefire thing.
Definitely. There are many different investment philosophies out there, and this one's definitely high risk, even for seasoned investors.
So not for the faint of heart.
Definitely not.
Well, we've covered a lot today. It's been a
Yeah.
really insightful deep dive into a very complex situation. Thanks for breaking it all down.
Happy to do it.
So let's recap the key takeaways. The stock market is in a volatile state right now due to these new tariffs. We might see some stabilization as April goes on, but a full recovery could take months, maybe even until the summer or fall of 2025.
Right.
And the speed and extent of that recovery will depend on things like trade negotiations and what the Federal Reserve decides to do with interest rates.
Exactly.
And for those specific stocks you were asking about, APVO looks promising because of its recent positive clinical trial results. NIVF's in a tough spot facing high volatility and a strong sell rating.
Yep.
And PTIX is likely to just follow the market's lead, which could mean further declines.
Yep. That's the gist of it.
And when it comes to trying to profit from a market crash, well, it's a risky strategy with a lot of potential downsides. While some investors might have made money doing it in the past,